Welcome to TradeTheNBI.com. This report is for the 6th of March, and isn't it a magical thing how we talked about, through here that we just didn't have the right timing and mechanism for what could be any form of a sustained rally, not to mention end-of-month shenanigans that take place as you clear out a book. You had all this deep pain right here that was resolved going into the end. So window dressing wise, it's not going to look very bad for your big funds and everything, but there still was plenty of time before we ended up with what we expected to be on Monday, which was what I had talked about, back over here when things were moving a little irregular to the upside, given where we were timing wise. But lo and behold, Monday comes in, and sure enough, oh yes, they've got all that extra money and nowhere to put it. So the market skyrockets. Well, relatively speaking, I mean, the ranges have been pretty good and we've pretty much cleared back. We could see that this was developing here once we had the turn of the steel, and it happened pretty early on in the morning, and then again, ABM green every time you're above it, definitely. Long setup whenever you get this kind of a reset. So that it matched with midterm buyers, and that's all worked out just fine. And well within our expectations, because the reality is the economy is growing. This is that simple thing, it's about the economy. Always. NQ, likewise, if we go back and we look at these, the differences in the ABM, now you're above all of them from an S&P standpoint, also from the NQ, but you can see the spread differential is significant in the sense that the NASDAQ had been performing better in general and still is. It's much closer to the previous peak high than the S&P. It's not a big deal because now we can see the DOC moving in concert with each other. It was just a broad breadth of buying, and we talked about this because it's just a little bit of a lag off of that Euro pump that was coming back up, and that was going to bolster U.S. stocks. These things all work nicely in tandem. Breakdown in treasuries, we expect that to go because we expect rates to climb. Though, despite the hype, I think that we may find it a little slower than some people think. While there are plenty of Fed governors jawboning, we haven't seen the rate increase yet, so still holding out hope that they're going to be a little slow go on that and prove that the stability of the economy is rolling. And you'll notice how, as I mentioned before, infrastructure that was supposed to be so bipartisan, was going to just be an instant thing, has sort of like really fallen off the conversation wagon, so to speak. Now it's just a rear thought, and I think you had the senator coming up the other day, not sure if there's enough time to get to it. Are you kidding me? Not enough time to get to it. Yeah, and that's because it makes no sense. You've got a heated up economy. There's no reason to add another $1 trillion in debt for projects to do what? Add further to, a bottleneck? No. So anyone with a third of a brain can figure that one out. The oil coming back again, we expected this was just a minor decline. It's going to ease a little bit of the inflation thing, though we are getting back up to those peaks. So not enough time at this lower level for it to really be much of an impact, because as we know, the prices of gas and everything rise much faster than they decline, and then when you move right back up to it, there's almost as if there was no change whatsoever. And gold still being held, and I don't know if any of you got that chance to read it was a good Zero Hedge article on gold swaps and everything. It was really indicates why gold isn't higher. And plus, like I just said, though, there's this potential of a delay in interest rate rise. This is what the market is telling you may exist. It can lag a little bit later, but we'll see. So here's, well, gosh, I even have to shrink this further. 5K ES chart, going back to all of our signals on the day. It's quite the Nice dip, good buy setups, gave another dip again, another more buy. And at this particular point, it gets to one of those where it depends on where you're putting your stop. I mean, if you're doing short scalp trades, a 2-zone move, perfect to take that. Especially when you have weaker shakeouts that have been in the negative, but it had gone positive, and then we ended up with the exact same thing happening a little bit higher DOC reds. So you can see if you even have that little line just going up, and you can just draw a little trend line going all the way across it. And even with the modest little blips over here, they didn't correspond with the moves of extreme, and you had that beautiful, always love seeing that cyan below red. Just makes it so easy to stay with a trade, even little declines. We ended up with a soft DOC spread right about here, and it ended up dipping a little bit. It wasn't enough to make all that big difference. You ended up getting a steel cross back above, along with the green midterm buyers all at the same time, pretty quickly at about the exact same area, and then that just finished up with a nice little run. We ended up with another soft spot. This was actually a cleaner short, and it actually made it all the way back to the 50%, because you ended up with higher highs, matching highs, much lower shakeout reading, and that usually creates a reset. We do have quite a few positive extremes from the start breakout of this algo, so any significant retrace is going to bring us back into the 2691 range. I'm not looking for that just yet, because I think that enough positive things in there that it's not really necessary at this particular point for it to pull back to that. But I like pointing it out because it's just like, if you wanted to trade some of these things, it just becomes very easy. Or you could have just gone with that general upside bias that we expected for the beginning of the month. The beginning of what I call the fund month, which would be the 5th, and sure enough, it worked beautifully. And this isn't something that I didn't discuss, because I mean, I went over very clearly last week in that we were waiting for Monday and this eventuality, that it worked out as beautifully as it did. It's a bonus, but it happens very regularly, and most people just don't even know it and don't pay attention to it, and that's okay. Doesn't always work. You have to follow with what's going on in the market, and that's the beauty of seeing where we were with the ABM and sort of the balance that had been achieved. So all in all, good stuff. I'll keep putting up the charts. It was good to put everything on the Skype chat and follow these things. We put these up pretty close to real time on them and just watched them go. So all good stuff. As always, though, trade well. We'll talk again later.